and finally flew back to Europe last week. Been back for a week, getting everything sorted again and getting back into the charts. So I'm pretty behind on posting the videos, doing the back testing, reviews and everything like that. But still around, still here, still trading every day in the market. Just had a few other things going on, but I really want to get this content out and really just like for myself, for everyone else, and to go through all this together. So what I'm going to do is my usual, going to back test Euro USD. Usually I do a week. Hopefully it doesn't run too long. A lot of my videos, hour long, so hopefully you guys don't get bored, but I do go through everything that you need to know. The indicators I use, why I use them, how I mark up structure, how I choose my OBs. I'm going to go a little bit more detailed, hopefully this one. Again, if you look at my last video or the second last video, I'm quite detailed in there through the whole thing, but I know there's a few things that I need to go like that, for people that are straight from the word go, that need beginners. So I'm going to make a couple videos on that, how to set up TradingView. Really want to make a series zero to funded, and go through where I started, what you need to know, what I recommend as well, and how you can achieve that in potentially, what's 2-3 months. Realistically, I think it took me 4 or 5 months from zero to funded. I was quite quick. Not everyone's going to be like that. I'm not here to tell you can become a millionaire overnight. But consistent, a consistent and like hardworking approach, and you can definitely get funded, and you can definitely replace your income and become a full-time trader and actually get some of your time back. So that's what I'm going to go through today. Show you my strategy. I'm actually associated with Paul, Trade Forex with Paul. You might have seen his YouTube channel. I'm part of the FTR group in the Discord. I'm one of the coaches in there, so I'm managing the group with him. All that sort of stuff. If you're interested, we've got a course. He's created a course in there that goes through the entire strategy and what I learned as well. There's a couple other really good traders in there that are doing really well, funded traders or making profit. We have pretty much all the same basis and style, but we use slightly different entry techniques just to suit our, some people are still working. I can obviously trade all day, but we still have certain sessions and everything I'm interested in. I'm going to put the referral link down into the comments, and also a link to Paul's stuff as well. So subscribe to me, subscribe to Paul, check it all out. We've got Euro USD. Pretty bad. I'm already back a month. What do we get? May 15, Monday, May 15. No wonder, that was the day before my birthday. So pretty much since my 30th, I've been trading, but I just haven't been creating the video. I just haven't had the time. So what we're going to do, blank screen. I'll introduce the indicators that I use. I use this one, fractal break, fair value gap, liquidity void. Pretty much just highlights the imbalances if it wants to work. Looks like it's a bit laggy at the moment. It's a bit strange. Let me just pause it for a second, see what's going on. I've got it working. What it was, the colors actually. So I'll go into it pretty much like this. I just use it for the imbalances, so I don't have any of this market structure or anything like that. I don't really like it, all the order blocks. I haven't checked it in a while, but I know what order blocks I like and what I want to pick. So I just use it to just easier to see. So I'm not searching around, especially because I'm used black on white and white. But yeah, what happened was these were just white, so I couldn't see anything. So you can change the colors, whatever you want. And it just highlights the imbalances in the market. So imbalances are where there's been either more buys or more sells, and the market hasn't equalized itself. And we can use them as points that generally eventually like to be filled up. The market likes to be a balanced market. So you'll see what I mean is, okay. You can see here where all the wicks, there's no gaps between wicks or bodies here. However, we have a wick here of this candle, wick here, this candle, and we've now got this big empty space, which we refer to as imbalance. You'll see here as well, the top of the wick here, the bottom of this wick here isn't touching. So we've got this imbalance here. So we've got a few, obviously this one got filled, but that's what I mean by imbalance. And I use them to really helps me identify good order blocks. And yeah, just to be able to make sure, because one of the key components of my order blocks are that out of the order block there has been some form of imbalance in the market, meaning there's been big money put in to move the market very fast and eat up all the liquidity there. So anyway, I think I might make a video on that separately, just to explain that further. But the next one I use is sessions, because I like to understand what session I'm trading. I have it on London, New York, Tokyo, Sydney. This just shows you the boxes. I think you have to go on a bit of a lower time frame here to see that. You can change the colors to them as well. You can put it to match your, I think it automatically matches with your time zone anyway. If it's wrong, you can adjust it. There's a couple good websites that I could put in the put in the description as well to get the like timing of everything. Maybe I'll just make a separate video with all the websites as well and upload that as well that I use, because there's a news website, there's the session timings website, obviously TradingView is what I have open, and then I trade with their MetaTrader 5. And so there you can see we've got blue is Sydney, yellow is Asia, you got the crossover here, London is green, and New York is red, and you've got this, London New York crossover as well, which is going to be like, that's the highest volume here. But it's good to see the London Open, because you don't really can put highs in on that, and yeah, different sorts of areas can be swept on the New York Open. So it's good to be aware of everything there. Next one I have found recently, if you have been watching, is this Multi Time Frame break of structure, which I'll put in the description as well. I don't always agree with it, but if you're struggling with market structure, it's definitely quite handy to have. I keep meaning to do like a video to talk through it, and to talk about the what to do in the settings. I don't really change anything except for show market structure and other time frames, put it down to 1 minute just in case I want to look at, because then you can see the market structure on all time frames as you go to them. And then the number of candles required, I just have 2 in here because that's just part of my rules. And then yeah, the last one I won't explain. This is an indicator that I am using. I manipulated it so I can set alerts, and it can alert me when there's a 4-hour candle closed, even if I'm on the 15-minute chart. So because obviously it can make a big difference how that 4-hour candle closes, and when you're sitting on the 15-minute chart a lot, you can forget about the 4-hour and you don't see how it closed, and it can influence you. Maybe I don't want to take that trade if it's closed super bullish or it's closed as a sweep, blah, blah, blah. But yeah, I might make a separate video explaining that anyway, just so I'm aware of it, because you just forget sometimes. And so yeah, so right now I'm just going to leave I'm going to turn them all off, just have a clean slate, and start on the daily here. And we'll zoom out. And yeah, we'll get started. What I'll start with is I'll start with market structure on the daily, just to mark it out. We've got breaker structure here, just the last few breaks of structure, just to obviously show us that we're bullish. Breaker structure here. You could say it's a weak break of structure, as we just broke with the body and then we had the sweep and a dump straight after. Along with, now we've got a bit of a confirmed liquidity sweep on the daily, which now has led to us with a daily shock. So pretty much what we have here is this is our daily high. Because we're in an uptrend, we trade with the trend until it's broken. We call this a weak high because we're expecting the trend to keep. We've got breaker structure, we've got breaker structure here, breaker structure there. We're expecting it to keep pushing. We're expecting this low here to be held. Oops. Our computer's a little bit laggy. Oh, good. I'll mark that out. Low. Strong. Okay, so we're expecting. Now we've got a daily chock. We're expecting a pullback here, even more so. We can, what we do is we have the get out your premium discount. We can draw that up. I think I had it here. Oh, yeah, so expecting some sort of pullback into this area where we're going to be looking for some strength in the lower time frames, 4-hour chock or a 15-minute chock to go long, targeting this weak high. You can see obviously we rejected, not obviously, but we have an old daily supply or point of interest. We wouldn't be taking risk trades like shorts out of these, but it's something to be aware of, because you've got a breaker structure. Oops. You've got an old breaker structure. You've got an order block that's swept once, twice, 3, 2 highs over here, dumped with imbalance below, and broken structure down here. We've also got other ones like this one, where you could, if you pull them across, you'd see reactions. They don't all necessarily lead to like reversals in the markets, but you can definitely get day trades out of weakness out of here. So we'll keep going on the daily here. So pretty much what we're looking at, I try to keep it simple. I've really simplified this strategy even more. Realistically, I like this as a flip zone on the daily because it was the last order block that led to the break of structure. It does have like a couple of things that I don't like about it, that we don't have the sweep candle on the front like this one here. But that's something I'll run through about the OBs later. And then we've got like this massive like daily demand here candle that literally just one day smashed down, swept, and then the next day we just started pushing up. So again, these are areas to be aware of, and the main ones that I look at. We call this a flip zone. You can, pretty sure that's the only name I have for it. It's not areas that we're going to take trades out just based on this area. It's areas that like of interest that we want to look for. Strength in the 4 hour, strength on the 15-minute, like breaks bullish chalk out of here, and then we look for the entries on the lower time frames because we're day trading. So all of our entries mostly are going to be on the 15-minute time frame. I do go a little bit lower sometimes if the 15-minute point of interest OB is very big, but generally I like to stick to that because there's just a lot of noise on the lower time frames, and especially when you're starting out, I think it's really good to get good at the 15-minute because there's plenty of money to be made there. Because it teaches you to be patient with the market and actually, trade well. So we're now in this one. It's not like I said before, I've got a few rules around points of interest. Okay, this one led to a break of structure. It has imbalance, as you can see. The only thing it didn't sweep, like you can see here, this big sweeping candle swept this low, this low, this low before pushing up. That's the only thing I have against this one. But because I'm not taking direct trades out of it, I'm happy to mark it out as an area of interest. I am also aware that it's in the premium area as well, so it's definitely lower probability. But in a bullish market, you can definitely get day trades out of this area on some strength. So something to be aware of. But this would be the big area we're looking for signs of strength to go long from for sure. Sorry, I'm babbling on, but I really want to explain it fully. Let's go down on the 4 hours now. I think that's everything on the daily. Okay, sorry, I'm gonna have to speed this video up because my computer is lagging. Let me zoom in a bit so you can see better. Okay, so now we got daily chalk here. After chalk, we're expecting a bit more of a pullback. It's just something with the markets with the strategy that we know. As soon as you get that chalk on whatever time frame, you definitely can see a bit more of a pullback. It's definitely a sign of weakness in the market, or market's looking to correct itself before it goes for the next run. So that's a good indicator that we probably will come into here because of this major low. What we have here, we leave that liquidity. It's also a liquidity grab on the 4 hour. This is what I mean when you tie in the high time frame to low time frame. So then we look at the last low that led to this liquidity grab. And here we have, now on the 4 hours, this is our 4 hour chalk, which then, this is first giving us the indication that, okay, maybe, this was our old 4 hour low down here. And that was our 4 hour high. We failed to close above the highs. We've then got a chalk here. So this is our first indication that we could be coming to revisit these lower area. And you do it again. You mark out what we would have done, mark out the premium and discount. After the chalk, we would have been expecting, looking this area, potential strength, down here where we're seeing some reaction to potentially short-term long. And then we've got the daily chalk, so now we're expecting even deeper pullback. It all just feeds into one another. But it just means that you can take more trades the lower time frames you go on. So, let's keep moving on. So, that would be the 4 hour that I would still be interested in. Click it. I'm going to delete this little line. Oh, I think it is. Yeah, that's still, I would still say that's a 4-hour low. Last low that broke structure. This is the 4-hour break of structure here. Then we had here, that was the other 4-hour break of structure. Just so you have an idea with the market structure. We're just looking at lows, the broke structure, push up, retracement, push up, failed run but no sweep. So we're still in this leg. You know, we could have come deeper, but we held and then we broke structure again. And then what we've done is this would be in the low. The lowest point between the break and the last high is this. As long as we hold this low, we're bullish. Broke that structure, got that, pushed up, failed, got chock. This is still the low, but after this chock here, you know, we wouldn't class it as a strong low. It would just be, you know, potential can hold, but because we've had this fail of the high and the chock, it's sort of like a neutral low. I wouldn't say it's weak because we're not in a downtrend. It's just not something that you'd expect after this liquidity sweep to like really be strong and hold, especially after daily chock, if that makes sense. So what's next? Sorry, this is probably going to be a long video. They always are. But the more explanation I can give, the more you understand, the better trades you can be. But yeah, I give this daily analysis every day in the group. So do a few other in Paul as well. And so, no, it's really good. What's next? I guess we can refine down here a deeper 4-hour. That's the most extreme 4-hour in this daily leg. There's a couple others. Nothing that I'm that interested in. I'm more interested in this area as a whole. Because there's so many, nothing that looks like super strong. Obviously, this one's already held before. Could be used as liquidity there. But anyway, we'll move on. We're all the way up here still. Okay, so potential areas for longs out of here, but we need to see on the 15. After that chock, we had a nice rejection out of this 4-hour OB that took the high. Really cool. That probably would have been, yeah, a nice 15-minute entry up there. And essentially the last, we could look for continuations to the short side. We've got a nice 4-hour area here. Because the last area that swept liquidity, swept some highs, dumped, broke some internal structure, caused daily chock, and created imbalance. So that's sort of the only areas I'm interested on the 4-hour for now. Because until we break this low, we're just going to be looking to continue the shorts down. Because we had the chock, got 4-hour breaks of structure internally, and yeah. Okay. Probably drew my points of interest too far, but okay, now we're on the 15. With the 15, we're really sort of only interested on the most recent breaks of structure. We're at a break of structure here on the 15-minute. Break of structure here on the 15-minute. And so I guess potentially a small break of structure here, but not that clean, bit of like a continuation. So for now, I'd like this would be, so we're bearish on the 15. This would be a 15-minute high. That's strong. And yeah, 15-minute low down here somewhere on one of these lows. This is where I'll come in, turn my sessions on. This could actually be quite a nice area. It was put in on New York. If we do come back to it, potential for a continuation trade. Let me just have a look on this leg. Something I always take into account. It is in the discount zone of the leg, so definitely something to be aware of. And let's see if this indicator agrees. Yeah, so pretty much does. Yeah. So yeah. Okay, let's get started.
Hey everyone. Sorry, got busy on Saturday and couldn't finish the back testing, so I'm going to come back to where we left off, pretty much at the start. So what I wanted to explain exactly how I'm going to back test today, so we have some 100% rules down. First of all, I'm not going to hold trades overnight. So I'm going to close them out, latest 9 p.m. Like my time, which I think is around 8 p.m. London or something like that. What I do when I'm entering on the 15-minute time frame, and what I'm doing is I'm splitting my risk between the 25 and the 45, the green line I have there. I was doing the 50, but a few times I was getting missed by just a fraction of a pip, so I moved it to the 45. Just with the funding, there's not the spreads are slightly bigger than some of the bigger platforms. When I'm looking at continuation trades that we've marked up here, is we are looking at continuation on the 15 from anywhere in the discount zone, which is the 50% of the leg retracement. So we can mark it out. So anything above this line is right for reversals. So I would be taking shorts out of here and shorts out of this extreme here. However, though, at the moment, like I explained probably before, is we're in a daily demand and a 4-hour demand down here. So it actually is a spot that is a prime for reversals. So that's why I've marked out this chalk, and we're looking to take longs here. However, because we are still 15-minute time frame downtrending until we break this high up here, the longs will just be targeting the next 15-minute supply, because I know this is where I'm going to be taking shorts from and trying to continue the trend. So yeah, that's pretty much how we're going to trade. I wanted to go something a bit more specific here on the points of interest or order blocks that I'm taking. I'm just looking for order blocks that still have imbalance, swept lows and took out stop losses and liquidity, and obviously broke structure. So that there's three things that are going to be necessary for me to take the trade from. How I'm managing my trades is generally I'm still experimenting with going to break even or just leaving it and just accepting the loss or the win. I have been playing around with if it goes to 2R, go to break even, but I still haven't got enough data to see what's better or not. So at the moment, we're not going to go to break even. We're just going to either let it hit target or go to stop loss. So let's get started. So here's our first one. We've had a 15-minute shock. We had a sweep of liquidity, which I will mark out just so we can have our 3, and they're still in balance here. So pretty much how I said, we'd split our risk, half our risk on the 0.25. We have our stop loss. What I do is I do 0.5 of a pip, half a pip below, just for spreads, and we would be targeting the low of this 15-minute supply or 15-minute order block, which I would also be having shorts from this area as well. Okay, let me just, so they'll be both on one, half the risk on 25, half the risk on the 45 here. And we'll be targeting the break of the low to continue this downtrend. And obviously up here, if we get up to here. Any time in this 4-hour point of interest, we get 15-minute shock, we'll be looking for shorts as well if this doesn't hold. So let's get started. So yeah, pretty much I wanted to bring in these conditions after re-looking over some of my old backtesting stuff and just really wanted to identify the highest probability order blocks. And that's a few of the things I noticed was, when we have that combination of 3, especially, pro trend, they generally can do quite well. So here we haven't got the pullback yet. So we've got a new break of structure here, especially in Asia. You never know, we could get a big sweep of these lows here, because this one didn't take any liquidity from that didn't take any liquidity from that. So, it's still lying stop losses there, ready to be taken. So let's have a look, mark it up as normal. Okay, target there that we're looking at. And yeah, let's go. Okay, been front run on that again. However, now we've just left more liquidity behind. Always double tap that Apple Max and they zoom in. However, we do have another break of structure here coming in on As you can see, the green, we've got London open here, sweeping some liquidity, pushing up, breaking, sweeping some liquidity again, pushing up. Broke some structure, but this took one low, no imbalance, liquidity. Really, this is the only valid POI still left, and this lower one as well. So I'd have my orders on both of these, just because they're essentially what I would, according to my backtesting, unmitigated areas. And if we reach this before we come into these, I will delete these orders. So, whoa, okay. So let's pull this across. Okay. Looks like we would have been tagged into both of these. Very big dump, but, you know, we're still in the premium area, in this red area. So this is more likely a liquidity sweep from all these leftover wicks than the reversal point. So you could get faked out, think chalk, I'm going to take shorts from here, but it's really good to have an idea of where you are in the leg. So it's just lower probability shorting from here. So let's just see what plays out. Maybe I'm wrong, but just from my back testing the strategy, that's just how I see it. So, okay. Oh, okay, there you go. On New York, we've got now take profit. Here, at this point, this one will be deleted as we've now tagged into into the discount zone. So that's all we really need to do to continue the downtrend. So I would be tagged into this. Okay, and our target would be here. This one, we've had a 6.5 on the 0.25 and a 9 on the 50% line. So we've just got wicks. So let's have a look what happens on a New York session. There's nothing really for longs here, according to the strategy that we're backtesting today. Nothing swept liquidity here. I guess technically it did sweep liquidity, and there is imbalance. That's true. Just the wick isn't on the outside, but obviously if we went to high time frame, that would be. Thing was though, is we haven't broken structure, so that's what makes it invalid for me. You never know, this low could hold and we could keep pushing up, and this was just a liquidity grab to fill the imbalance. But let's see. Okay, we've now got some breaker structure, a sweep, imbalance here. But what's it coming into? Yeah, we're at 7:30. It's just it's not these time of days that I would be taking trades, but let's see how it plays out anyway. Yeah, so I'll mark it out anyway. But obviously, in terms of my results, I'm going to have it reflected that, you know, we've chopped here again. We've showed bullish momentum. We pulled back. We haven't, you know, it's sort of like we're in internal uptrend and strength internal uptrend with imbalance left behind. We'd still take the extreme. That was swept liquidity, just because none of these lows swept anything. So they're just seen as liquidity, ready to be taken. So realistically, you could put your long underneath these lows because you assume they'll be taken. But we're just going to trade it as we see. And I guess let's target this 4 hour here. Well, really probably, yeah, let's target 4 hour, be ambitious. But let's see if we get tagged in at all before overnight. What's the time now? Yeah, what are we? 10 o'clock. We'll keep it on for everyone that trades potential. So as soon as the blue starts, yeah, so we're in Sydney. Yeah, for sure. If you're in Australia or even in the Asian time zone, I think this would be a very valid long for you. We've got the sweep. It's filled partially the imbalance, but you know there's still a liquidity line here. So it'll be interesting to see if it does play out. Okay. We have got a push up in Asia, but there was no sweep of any liquidity down here. So for me, it's not a valid point of interest. A lot of people will be like, oh, you broke structure. Why isn't this valid? Because I'm sticking to strict rules in my OBs. They need to have swept some form of liquidity down here and not left anything behind. So with my data, this is likely to be taken out. But you never know. Yeah, well, that's pretty good actually. Yeah, well, exactly what I said. It took out some liquidity up here, and then we have tagged into our New York low, which I think it's super important to respect New York lows and highs. Realistically, with my take profit, you know, this wick could be pretty strong and could hold us down. But due to the fact that we had this huge wick rejection and we didn't break this low, it just brings me to the fact that I think we're going to take this high. If this was really, they wanted this to be the high, we would have pushed down these lows and then had the retracement and then pushed down again. So we'll just see how it plays out anyway. But just what my eyes seen. So yeah, this would have been awesome. See what I mean? We would have been tagged in on that 45, not on the 50. So it's just something I've noticed in my back testing and gone back and looking, and that's why I've incorporated into my trading. I think that's really what, if you're not a beginner, you keep it simple. Beginners, you got to keep it simple, trade what you can and trade it well. But once you start refining your technique, it's these little things you notice. And I'm sharing this all with you guys, obviously, from hours and hours and hours and weeks and months of back testing. I found that, yeah, the 50% was getting front run or even just touching it and not enough to get me tagged in. So yeah, I've slightly changed it there. So what we have here is imbalance, break of structure. And okay, this wick isn't on the inside, but the fact that we ran all these lows, I would consider it a pretty nice liquidity sweep, to be honest. It could be cleaner, and it could still be run, but yeah, probably will be run. Now I think about it, kind of breaking my rule slightly on this one, and I'm probably going to pay for it, but maybe we can show. Just something I noticed when the long wick, you know, going long isn't on this side, the long wick isn't this side. You know, it means there's left behind liquidity ready to be taken. So especially once we get London open, but you know, I'm happy to take this just due to the fact that we did take out all this here. So let's see. Yep. Okay, there you go. Crazy. So pretty much what's happened here, we've been stopped out of both. I guess what I didn't take into account is this leftover imbalance, which looks like they just came to fill it. Anyway, we know that for next time. We'll note that down. I'm just going to mark it down now. Hold on. Oh, there. Yep, that's definitely something as well. Underneath, it's just asking for the wicks to get run. So we've hit this. We've had the fake breaker structure. Realistically, I wouldn't be in both these trades at once because, you know, unless this is hit take profit one, which it hadn't, or any sorts of air move up, this would just be if you weren't in this trade. So even though there'd be -1, overall it would be just one, not two. Just I think that's how everyone should, you know, especially when you're beginning. If you did want to do, if you were in that first trade and you're confident in this next trade, I wouldn't double your risk. I would, you know, do a portion of your risk so you're not, you know, -2% if that goes wrong, like it did now. Okay, so we had the sweep and the breaker structure. Let me just bring this in. Okay. That's a really good thing to note. We will note that out at the end. I just didn't notice that there too much on my chart. Pardon me. Okay, so here we pretty much have swept liquidity here, and broken structure, and we've got imbalance. So this is my valid point of interest if we come back to it. You know, I know on a low time frame, this would have probably swept slightly and have some balance in there, and it is the London low, but I'm going to stick to my rules. And we'll just leave it on that. Love to see when this happened. Yeah, 8:15. Yeah, 8:15 my time is pretty much the Frankfurt Open because I'm in Germany right now. So it's definitely something to be aware of. So, well. Okay. All right, well, we've now hit our target. So we will delete this. Yep. And like I said, okay, we may have just tapped it, but in a bearish market, sometimes that's all that's necessary. So we'll be looking for like a close below this line here for like a 15-minute shock, okay? And then we'll be going short. Okay. Yep. Okay, let's have a look. So swept these highs, got imbalance. You know, theoretically, you know, this could be the area of interest. However, we're coming in on a New York Open. They're going to want to take some liquidity. So let's just use this entire candle. You know, I would, if this had taken a little bit more of these highs, maybe even a couple of these highs higher up and dumped, but because there's still like stop losses, all these stop losses here equal highs, it's likely that the price will go up, take all that out, and then continue down. Okay. I'll just set this up. Oh, my computer's lagging. Quite a big stop loss, but it is what it is. Zoom out a little bit. And this is going to target the lows. Let me just mark that out where that is. 15-minute low. And it's a weekly. Okay, so let's see how this plays out. Okay. We did break structure here, but had a slight wick, slight amount of imbalance. However, we've left liquidity, so it doesn't. There's just too much leftover liquidity for me to want to take that short. Okay. Looks like it's just going sideways. So pretty much the only valid short is here. You know, on low time frame, maybe this would have been this could hold, but just the fact that there's still, 1 wick, 2 wicks, 3 wicks not mitigated, just seems low probability to me. Let's see where we've reacted out of. The same area again, a bit strange. We're still expecting it to break these lows. Not really. Hey, what do we have? Break there. It's the sort of what I'm looking for still. Let's see. Sometimes you get this. All right, well, there you go. Yeah, so unfortunately never got that pullback. Let's just have a look where it did finally reject from. Nowhere in particular, really. Filled this little bit of imbalance and then crashed. So there wasn't really, if you were taking this point of interest here, you would have been stopped out. You tried to take from here, it wouldn't have reached anyway. I guess you could have looked at shorting weakness around here, but maybe that wasn't that valid because there was no imbalance from it. But now we've got this break here. Haven't got a sweep. So yeah, no valid areas yet. I guess still this high here, but getting less likely as things go along. Coming down hard and fast. What day are we on actually? Oh, Wednesday. Okay, let's have a look now. We have got, this one's a tricky one because we just learned a lesson before. Okay, we have taken out liquidity, but what do we have above this? Huge amounts of imbalance. It did break structure. It did sweep liquidity. It has imbalance below, but it has a balance above, which is just asking for your stop loss to be taken out. So I wouldn't take this either. You're going to find when we're very strict with our rules, we're going to be taking a lot less trades, but you'll find that you're going to be taking a lot less losing trades. And, everyone wants to be a hero and say, losing trades don't affect me. But everyone, you have to be, pretty honest with yourself. Most people, they do, especially if you go and get 2 or 3, to get scared to take the next trade. I've have it myself as well. So that's why I refine my strategy more and more, because I'm still working. I've only been trading Forex for just not even a year yet. So I'm still working on my emotions. It takes, I think, a long time. You take a few losers in a row and it can really affect the next trade when you really don't want it to. So being more strict with your rules and really identifying high probability setups is quite important. So that's what we're trying to do here. See if we can still be profitable. Let's see. Okay. We identified that this had, it had everything we wanted in terms of point of interest. However, this imbalance above really is just, a magnet for stop hunts. So we may see if we were conservative with our take profit. I don't think it would have gotten us to 3-1 anyway. Yeah, it wouldn't have been tagged on anything anyway. So let's see. We don't even know if it's going to hold yet. But so I just want to, really want to show you guys the importance of. Okay, there we go. So we didn't get tagged in anyway. It did hold, mind you. So that just goes to show you it doesn't always, but we're still in the daily premium area, so we expect it to at least get into this red area at some point. But yeah, in terms of 15-minute, there's nothing I really like here. Okay, I'd like to have a look at that actually. Okay, yeah, was a slight higher. There's potential that this could have been a decent little trade. You would have been conservative with your targets. Let's have an even look if we would have got tagged in. Yeah, okay. If you're just targeting the low, targeting to take the low. Yeah, okay. Yeah, that could have been definitely a decent trade. I didn't see that the wick was just above it. So that's definitely valid. I think I was being too cautious. Because of the wick, then we had the imbalance still there. Then we had the break of structure here as well. It did fit all the bills. There was no imbalance above it. There was just a POI above it. But now we have a wick, liquidity sweep, potential to see some sort of reversal here short term. Yep. So pretty much. Oop, come on. It's got so slow. Sorry, guys. Got this chalk here. I guess the only one I'm interested in is really this. Still some imbalance here. Liquidity line here. Swept liquidity. Led to a chalk. There's this line liquidity, nothing that swept. So we'll mark that up. Okay, let's have a look. We're looking for longs out of here. Let me have a look. Just because we're getting into such a... Are we looking longs out of there? That's the question. This is now a broke structure. This is our 15-minute high. Strong. This is a 4-hour order block that we marked out that I'm liking kind of less and less. So I'm going to delete it. And I'm going to move this across. Okay. Sort of really only like this. The extreme. So I like to do, we've got a new leg, we've got chalk. If we want to take some counter trend, we need to have our areas marked out. Yeah, I think it's only really that. All the rest doesn't seem so strong. So yeah, let's see how it plays out. Now I'm really only taking this long here. We've got 50-minute chalk. We've broken a 4-hour low, taken all that liquidity. We're right near the premium discount area for the daily, and we saw we're in a 4-hour point of interest. So sort of ticks all the box for a reversal. If you think it's too risky, you only want to trade with the trend, then don't take it. You don't have to. There's plenty of trades to be had otherwise, and you just look for your shorts out of areas that you believe are valid for shorts. So let's see here, coming down. Yep. Okay. And yeah, that's why counter trend can be risky, because like I said, it was sort of broke my own rules. Unfortunately, the 4-hour POI wasn't one we marked out before that. We thought of significance because it didn't sweep really any liquidity. It did have imbalance, but it wasn't like a massive massive area that we're interested, especially just above this premium discount level. So we'll mark that out anyway. Take the loss. Okay, swept the low, which is that was our 15-minute low still here, new one. And let's go. We've swept it. Not really much interesting. Okay. Okay, nice. Okay, we've now essentially got a close and break below here. So let's see. Still nothing really that interests me. Whoa. A wasp. Okay. Oh, interesting. Wow. Okay, let's zoom in. Yeah, sometimes it's just better to sit out. It could have gotten like slightly aggressive, but according to there was no sweep, no sweep, no sweep, no sweep. Just angled liquidity there. A little bit of sweep on this one, but then we had not a close below, so there was nothing to really tell us that this was going to hold that strongly, as it didn't meet the one of our confluences, breaker structure. And our breaker structure is with a body break on the 15-minute time frame. So we've now got that here. We had some sweep of the highs there and huge volume coming out. So it's not like the best, to be honest. But I want to keep this good thing interesting for you guys. Just watching price action, not taking any trades. But that's what I mean. We're really wanting to see if this can play out in the long run, This was pretty risky, long. I'll admit that. But it did meet the rules, technically. Okay. Tricky bit is now, I guess, to the daily demand. Why not? It's not really any other areas that we're that interested in before that. Okay, let's have a look. Did we break structure? Probably the one we're finally going to take. Sweep of the highs. I'm probably going to get wrecked. Not a very good, not a good week to demonstrate the power of all the confluences. But I promise you it is there. Let's just see how we end out the week. It's only Thursday. Okay. Pretty much, yeah. I don't know if we'd even take this because our target's going to be just there, so this would be deleted. We'll see if it would have played out anyway. But like our target is a daily demand, unfortunately. So, you know, we could do like a trailing stop loss. Oops. However, okay, what are we? Yeah, likely to be taken as we are. Okay, maybe it will be a good example. It definitely was. There you go. Okay, this one we're going to get tagged in anyway. There wasn't anything valid. Never came back to that one. Swept, broke structure, imbalance, and we would have got our take profit. So now we're seeing if this is going to be a liquidity grab or an actual break of structure. Okay, nothing really obvious. All right, there we go. Okay, yeah, if you're willing to, like I said, that Sydney sweep, well, that was even on Asia Open, I think, Tokyo Open. We've got the swept. This is for like the Australian agent session. We had this chock here. This could have been your point of interest here. You're entering on that, and yeah, looking to take some of this liquidity out that we've been left behind. So would have been pretty good. I'm going to mark it up there. So I want to get a bit more data on this Australian Asia sweep business. I haven't seen like really anyone investigate it, so it could be a game changer that I figured out while I was in Australia. Because like it does, if Australia sweeps some nice liquidity and then gets a nice break of structure or even a chock, Asia tends to respect that low, and you get some volume out of it. So, you know, what would if we swept this? That's a weak high. This is really the target. Pretty crazy, is that old supply there. This one up here, our old valid. Because since we broke that low, this is really our 15-minute high up here. And that meant to be our strong high. And so, yeah, that's really what we're looking at. Let's see if that happens. You know, thing is, you almost need it to happen before London, because London loves to take Asian liquidity. So let's have a look. You'd almost would have front run it on there if you were open for that long and just close it out. But let's just see if we do get there. I'm interested. Oh, there we go. See, there's the power of it right there. That's 8.7 on the 25. And, oh, come on. 10R, 11R on the 45. Awesome. There wasn't anything, so I wasn't really paying attention. There was nothing really on the clear on the way up that we're looking to take this time. We've been quite strict with our entry criteria. So, and it's counter 15-minute trend, mind you. This is a nice little deep. There probably was something in there that got put in on Frankfurt session because it's right where Frankfurt Open was. But, you know, nevertheless, we're going to stick to the 15. This actually would have been, let me see. So I got a little bit excited with that Asian sweep. I mean, the Australian Asian sweep, whatever you call it. Let me have a look. Discount. Okay. Would we have taken a short from there? So much liquidity above it, hey? Really not anymore. I liked it if we had to come straight back into it and gone down. But I don't really like anything here. So I feel like this high might get run. But it's been run before. Looks like, yeah, not really anything major that we rejected from. It's just taking a lot of stop losses out here, as we said. So I'll move that in. That was more just like, yeah, somewhere that target. What wasn't anything that I liked here. Too much liquidity on these wicks here, even though we had slight sweep of the lows here. It was just, if we swept all of them, yep, definitely something I would have liked, but potentially this, but we've got imbalance below. So yeah, it's not really looking, want some sign of strength. Probably going to just take the lows out. Oh, wow. Okay, there must be, I'm missing, hold on. Ah, no wonder. Hold on. Okay, I was wondering. Ah, yeah. So we wouldn't have been looking at any, Fed Powell speech. It's not something I trade, not something I'm looking to enter around it. Didn't really get to anywhere that we'd be interested in anyway. So we're not in any trades right now. Okay, sort of what we're looking for. Did a first sweep, but then we got the break. Like the break here is sort of what I wanted. I prefer to have that. And, oh, I don't really like this either. Hold on. Just that balance right below. Hey, I'm going to be strict my rules. I'm not going to take this. I may regret it. I'm not taking many trades, but myself, we're already on. That was Friday. No wonder. Yeah. All right. Well, perfect. Okay, that's the week done. Time flies when you're having fun. What I'm going to do is I'm going to go back and tally this all up. I'm not going to record that just because it just makes the video super long and you don't really need to see me doing maths. And then I'll come back and I'll explain the results and then I'll just talk through all the trades again quickly one more time and then tally it all up. But yeah, hope you enjoyed it so far. So if you really liked the video, don't forget to subscribe, like, share it. Going to do back onto weekly, hopefully even daily. I want to do like daily reviews of the day, of the trades I took, of the trades I didn't take, of my wins, my losses. Have a bit of like a recount on the day so everyone can see how I trade. Maybe I'll go live during the day as well. So yeah, subscribe if you enjoy this. Trying to make it as simple as possible. I'm testing a few different things, exact same strategy, but being more strict with my order blocks I choose. I might have broken the rules a couple of times this time, so I'll have to have a look and whether I include those or not, if I think they're valid at the end. But yeah, hope you guys enjoyed this, and I'll see you in a second with the results. Hey guys, yeah, you notice there's no camera this time. I'm having issues with my recording software, and yeah, it wouldn't link to the camera, so just going to have it without. Should be a quick end to the video. There's a couple I noted down, and I've just noticed that this one should be removed as well. Something I forgot to mention at the start of the video, that I wanted to not take anything that had leftover imbalance above. And you can see this trade up here still has imbalance. Let me just mark that out. And so this would be, yeah, not according to the rules that I was trying to stick by. This would not have been, I don't know if I'm going to be able to do it. Wouldn't have been a valid trade. Anyway, so remove that. So there was actually 0 losses. You can see you take a lot less trades, but we actually took 0 losses with following this plan. Here as well, yeah, if I had to notice the imbalance before, it wouldn't have been valid. This one as well, after looking back on the 4 hours, it wasn't actually in. So this was our 4 hour and this was our daily. It was in no man's land, so it actually wasn't a valid reversal, so I removed it there. I'm not trying to screw with the results. I'm just trying to stick to the plan exactly so I can actually get proper good results that actually back up how I trade in real life. So what we have here in the end, London, New York, from the 0.25, we got 12R, from the 0.45, 17R. So if you were to split your orders across that, your risks are 0.5% on each. What do we got? That's like 29 divided by 2. So yeah, 14.5% in 2 trades. It's quite nice. And then in Asia, we just had the 1 trade. So you're looking at about 10% from that sweep of the low. And I'm going to go into a bit more detail for the Asia and Australian session traders, because this is something I noticed happening like a few times a week. There's a few things that you need to pretty much what with the confluence we covered here. So really nice though. Let me just write them down. So order block / POIs. Okay, so we want to have swept prop liquidity, all recent lows or highs that come behind it. And we wanted it to have imbalance. Let's write it shorthand. Balance coming out from the POI, or at least left over in the leg. Cause the break of structure, and no imbalance directly above. And yeah, so that's what we had. and this is the results we got. We weren't holding trades overnight. Everything was closed out within the session, and yeah, pretty much when we were counter trend, we were just targeting the next area of supply demand with trend. When we were outside any of these marked areas, we were just targeting the next break of structure, as you can see, and same with this. Yeah, we only really would have taken if you two trades there, but you know, not bad at all. So hopefully you guys enjoyed that. Any questions at all, let me know. Really cool to backtest with these strict rules and see that it works out really nicely, and it can really work for people that have struggled taking losses, to really, you know, hone in and define what is a high probability order block that you think is going to hold. And this has taken, you know, months and months for me to actually notice and realize and identify these these key order blocks that are really high probability. I want to actually go down a time frame onto the 5 minute and play around with similar strategy, but then you get a few more trades, you know, if you can't be at every day, to pick up these few that we have. But that's, the plan further along. I want to also test it with a few different pairs as well, but yeah, for now it's really good. Take a screenshot of that if you'd like, and yeah, I'll see you guys in the next one. Thanks for watching.